Wednesday.
Hey everybody, Mark Dannenberg here from Options Moneymaker. We had another great day today. I've got Michael Kastner with me. Michael hosts our live trading room. We made money today, but we spent most of the day just waiting for the Fed because everybody was poised on the edge of their seat. Is the Fed news going to be positive for the market? Is the Fed news going to be negative for the market? And nobody really knew. So we weren't as productive as we normally like to be today. We like to ignore all that news, uh, all that nonsense. It's not really news; it's nonsense.
Hey,
Uh,
Mark,
yeah, Michael.
excuse me. You know, I, I've, I really thought about this before I decided to do this, but I'm going to resign from Option Moneymaker because,
What,
yeah,
what are you
it's
talking
got to,
about?
well, because I've read some articles today that I believe that I could do a little bit better writing them than they do. Some of the nonsense they come up with. I mean, I'm searching I just look at my app, on my phone, and I come across CNBC, and it says there's an article that says outlook so depressing, need to swim in beer. I said, what?
Are
I
you
mean,
kidding? You're kidding me.
so no, I'm not kidding.
And
It's
Michael,
it's
this
it's
is
just
why I tell you not to read the news.
I know it makes you depressed, it makes you want to go drink. I don't even drink, but anyway, so I start reading down through the article, and this guy's talking about that the medium-term economic outlook has become so depressing that he may as well fill his newly installed pool with beer instead of water. He says, and that's another, well, anyway, I'll leave that alone. But he says, drinking up seems to be the only answer for investors to get through the market. Are you kidding
Oh
me?
my
Why
gosh.
would you print something? I don't know. Maybe I don't know. Maybe I just look at things different. But my gosh, that is just so. I don't know.
Well,
To be
don't you
honest
think
with you, it's
that's
just stupid.
irresponsible for somebody
Yes.
who is writing for financial media to put something out there that does nothing but perpetuate the fear and anxiety of investors?
Mm,
That,
incredible.
that's my personal bias. Seriously, fill your swimming pool with beer. So there's all sorts of irony in that. So evidently the economy was good enough in your household to build a swimming pool,
That's
but now you're depressed because you think you're going to have to fill it with beer, or your solution is to fill it with beer. Michael, all I can say is that's nonsense, and
it's nonsense.
you're not going anywhere because if you want to go write articles, you need to know what to write about, and the only way you're going to know what to write about is by doing exactly what you do every day and helping me host our live trading room and
That's
help people make money. All right.
right. Yes, sir. That's correct. That is correct.
But we did make money today, despite the fact that
Yes.
it was a little slower for us. We were a little iffy. We were waiting, like so many other people, for the Fed news to announce. And as it turned out, the Fed ended up pushing the market a bit lower. But here's the interesting thing, Michael, and I know you are a chart technical master, and I've just always been fascinated with technical charting. If you didn't know today that there was significant news that typically drives or moves the market, there was nothing unusual at all about today's activity relative to the patterns that we track. Nothing at
No,
all unusual.
nothing at all.
We actually came down to a level of support. In fact, I'm just going to jump to a chart here for a minute. We don't show charts a lot here, but I just want to point out for those of you who are viewing this, something that Michael and I identified and we shared with our subscribers in our live trading room. If you go back to December 29th and you look at the highs we were trading at, and this is the NASDAQ 100 index, NASDAQ 100 index. You look at the highs we were trading at December 29th. Now it's pretty apparent that we were in a declining pattern. Declining pattern is bordered by a level of support and a level of resistance. And the price of the index moves lower in that pattern and then it moves higher in that pattern. That's what forms the pattern. If you compare the highs on the 29th of December to the lows on January 20th, you can see that it was starting January 20th that we started to move higher, and then we broke out above that declining resistance. Now, these lines, these horizontal lines on the chart, you may or may not be able to see that they're blue. This is a Fibonacci retracement grid. Now, Fibonacci retracements are commonly used in trading, and they tend to pinpoint key reversal levels in the market. And look at what happened here. Well, let me just give you one other tidbit here. Those key reversal levels are typically at the 38.2% level retracement, 50% retracement, or 61.8% retracement. When the market moves and reverses and retraces a prior pattern by those levels, it's a good indication that we're seeing a reversal, and we may continue seeing we may see a continuation of that pattern. So here we go. When we moved higher and we broke out of that declining pattern, we moved right up to the 38.2% retracement level. Now, if I zoom in, you can see this very clearly. The price activity moved up and actually for 2 days walked right along that line. It's almost as if there was something blocking the price from going higher, and it just happens to correspond almost perfectly to that 38.2% retracement. And from there, we cycled lower, and we cycled lower in this declining pattern. Now, what happened today is on a more shallow term Fibonacci retracement from the low of January 20th to that high, that series of highs right there. In that shorter time period Fibonacci retracement, today we retraced almost to the 60.8% retracement level.
Yeah, 62%, Mark, 61.8.
62%, 61.8. So what that tells me is, and I'm not predicting here, but what we do is we read these charts and we do the best job we can to kind of stack the deck in our favor. I would not be surprised, although I'm not guaranteeing or predicting, that a move like this is nothing more than a retracement move down in the beginnings of an overall rising channel. So if you go back to the 20th of January and you connect that low with the two lowest lows of today's trading, and then you put a parallel corresponding resistance line across this series of highs right here, we're going to find out in the next couple of days whether or not that's a valid pattern. But I just found it fascinating that all the activity today occurred inside the normal trading channels and the normal patterns that we would track, whether you had Fed news or not. And Michael, you mentioned something to me about an Elliott wave pattern that actually reinforces what I just said.
Yeah, I did, Mark. I don't trade off Elliott wave, but I look at it to see, where the charts might think we might go. But actually, that high that Mark that you pointed it to right there at the high between the 25th and 26th, that's actually looks like it could be, and it's the 60-minute time frame now. So that could be a 3 up right there, and then today's moved down, or whatever day it was. It's been moving down since the bottom today. Could be a 4. So basically, if we get a move back up, it's going to take the high out. It should, if this counts right. And so all my indicators are at the bottom, which that means that it can stay here for a little while, but on a 60-minute chart, it's going to move back up eventually. So,
and when you say take out the high, that means on NDX, it would move back above the 42.68 level that it was at on the 25th.
I can see that happening, the 42.68 range, and then and I can actually see it. I've got some indicators that says we could move back up to 43.55, but now that's going to take us some time. I mean, it won't happen tomorrow. I wished it would. I mean, that'd be great if it did, but I don't know that.
Well, Michael, what's interesting about that though is if I just look at my patterns here, if we did move up off of this rising support and we moved higher inside this rising channel, then I could see how we could get back up around that level that you just mentioned, 43.50-ish level. Right?
Yes.
It makes perfect sense that that could possibly occur. We're not predicting when that would occur. We're not even saying that it's going to occur. But
Mm.
charting and technical charting is all about looking at the patterns from a variety of angles, and Michael shares his perspective and I share my perspective and we compare notes. And it's about stacking the deck in our favor so that we have the greater likelihood of winning on the trades that we decide to place. So we trade short-term patterns all the way down to 3-minute time frames, and then we use longer-term patterns up to daily charts, 1-year daily charts, and we compare all of those different views and develop a consensus amongst those views, and oftentimes a consensus amongst our trading team as to which direction we may be moving. And that's how we trade, and that's how we are able to earn the type of profits that we do. So we did take profits today, Michael. We took $869.84 in profits. And although I don't think it was a very productive day,
No.
I'm happy that we took gains, because what's our average daily goal?
400 a day is our average. When we started this program, that's what we wanted to do, is average 400 a day, not a position, a day.
Right.
400 a day.
And we decided if we could average $400 a day, that we'd be quite content, because we'd be helping other people earn that same amount of money or possibly more in our trading room. Anything that happens over and above 400 is just a natural outcome of doing the type of analysis we just shared with you in the chart, evaluating positions and looking for the right entry.
So our $400 a day, and our daily average is 2,300. So let's say back in the beginning that our goal was $1,000 a day. Would that mean we'd be making $4,000 or $5,000 a day average? I mean, would that have worked that way?
No,
You know,
no, in fact, but you know what you're talking about is topic for a whole nother show, because
it is.
we're talking about the psychology of traders and how easy it is for a trader to get sucked into, well, if I can do that with one contract, look what I
That's
can do
right.
with 5, et cetera, et cetera. No, we set a very realistic goal, $400 a
Yes.
day, minimal capital at risk, allows a lot of people to take advantage of this type of trading. And we're actually averaging $2,300 a day. We haven't forced anything. We haven't tried to achieve a $2,300 a day goal. What we do is we look for the signals that we trade in our live trading room, and all we do is follow the signals. And some days there are minimal number of signals, and other days there are a lot of them. Our average number of trades per day is 3, but that means we have some days where we've had 0 and other days where we've had 7, 8, or 9 trades. But our average number of trades per day is 3. So I'm pretty comfortable with that. I'm pretty comfortable with what we did today, and I'm looking forward to tomorrow. And you will be here tomorrow. You're not going to go right for financial media
No.
because you need to understand what it is to write about, and the only way to understand what to write about is by actually being in the trenches and trading. And I personally think one of the most effective ways to learn how to trade is to help others trade also, and that's what we do in our Profit Builder Education Program. Great entry level for newer traders, as well as our live trading room, which is just a magnificent opportunity for people who have the time and the inclination to trade on a regular basis throughout the day. So, Michael, as always, thanks for being here. Keep watching the headlines for absurdity, not for information. And we will be back again tomorrow. Thanks again. I'm Mark Dannenberg. Check us out at ommprofitbuilders.com or optionsmoneymaker.com.